Good evening, everyone, and thank you for joining us for our virtual session, Car Buying with Confidence. My name is Barbara Agan, and I am the Director of Member Engagement and Education with Edify. And your very skilled facilitator this evening will be Bill Mitchenfelder, and he is the Senior Business Development Manager at Edify. So I will now turn the meeting over to Bill.
Thank you, Barbara. I'll also add that with my background many moons ago, I did work in the automotive industry. I sold cars, worked in finance, and I was also what they would call a dealer rep for the banking industry. So I kind of got a full flavor of how I understand how a dealership works. And my aim here is really to make you comfortable with the process so that you can get the best deal you can, and more importantly, enjoy the car. That's the key. You don't want to make it a process where you really hate it and you're just glad to be done with it. You want to enjoy the new car you purchased, but at a fair price. So let's begin a little bit. Now let's talk about the current car buying environment. Right now, it's kind of interesting out there. There's a rather large supply of new cars, which is good for, it's more of a buyer's market. I did look at many of the specials in finance or cash money that manufacturers offer, and I didn't find as many out there as I thought I would. There's a great deal of cash money, but not so much on the finance side, which kind of surprised me. But we'll talk about that if you do run into them. There's so many cars to pick from. But you'll find that the new car market is flush with cars. The used car market on the later models is a little light. So that pricing hasn't come down yet. It still tends to be high, which sometimes will push you to go in for that new car. Now, on the finance promotion, I just put a simple calculation up here. Many times the manufacturer, to help move a car for the dealers, will offer a promotion, and they'll give you an either or. So in this instance, and this was a vehicle I actually saw, they were offering a rate of 1.9%, which is phenomenal, for 36 months, or $3,000 cash back. Now, if you take the 1.9% for 36 months on $25,000, that payment is $715 a month. Don't know about you, but that's a bit steep for me. Now, if I took that same $25,000 car, took the $3,000 off and brought it down to $22,000, and then financed it at 5.99% for 60 months, my payment would be a much more manageable $420 a month. So I would say when you find out two things on these promotional rates, one is they typically will say for well-qualified borrowers. That means somebody with really A++ credit. It brings you in the door. If you don't qualify for it, you fall in line with all the other bank rates, which are going to tend to be on the much higher side, especially versus our rates at Edify. So just something for you to think about when you're looking at that. It may make more sense for you to go with the cash back money. Now, I broke down what I call the steps to success: research, prep, pre-approval, the price, a trade, because it does exist, and I'll burst some of the myths that they tell you to do out there, and review the deal and sign, and then take delivery. And just as an FYI, I'm doing this from my home office, and I hear my dog with his squeaky toy. He typically does this when I do presentations. So if you hear a squeak, that's my dog. So let's go step by step to make it easy. The research side is on your part. And I know this sounds simple, but it's important, because this makes everything I'm telling you, puts you in control of the process. Review your needs and wants. You know, are you looking for that two-door sports car, or do you need the minivan because you're going to drive kids to and through all the different arenas and fields to play soccer and softball and flag football and basketball and all of that? Do you tow a boat? What are your requirements? So then you really know exactly the type of vehicle you're looking for. The other part of research is looking at pricing. Now, we just listed 3 well-known sites out there: Edmunds.com, TrueCar.com, and KBB.com. There are a couple others. What these do is they give you realistic pricing of what you can buy a car at. 2 things on this. First, talk about the car. If you're looking at a Corvette, the price is the price. And if that $75,000 Corvette may even have an addendum that adds another 10 grand to it. And that's because it's desirable and there's not many of them. If you're talking about a sedan, which most of us drive, like I drive a Honda Accord, Barbara drives an Accord, Toyota Camry, a Chevy Malibu, those are more prevalent, and you're going to see more specials from the manufacturer, and the dealer is more inclined to adjust the price of that. One other thing I'll warn you, though, when you look at Edmunds, TrueCar, and KBB, as you delve in further, the way they make their money is by charging for advertising and trying to direct you to their financial institutions that are paying for this. So be prepared when you get to a certain level that you want to be ready to buy the car, because you're going to get inundated with emails from everybody, all the dealerships, looking to sell you that vehicle, and you don't want to be pressured. The key, relax and don't be pressured. Preparation. This is all on you. And this is the easy part. Be prepared to make the purchase. So that means if you're going to trade your car in, you were given at least 2 sets of keys. See if you have both sets. Because if you're trading it in the night you're there at the dealership, they're going to ask you that, and you don't want to go back to bring a second set. Make sure you have 2 keys. Title. Make sure you have the title. Find it. It's in the safety deposit box or stuck in a drawer in the kitchen somewhere. You're going to need that as well. Check your driver's license. Make sure it's up to date, because they have to make a copy of that. Check with your insurance company as to what time they're open when you can call, because when you take that vehicle, you want to have it insured. In fact, by law, you have to, and your salesman will ask you to do that. Have that all ready. And then, of course, proof of income. If they are going to ask you to finance, they're going to want to see that. Okay? And I will say this. Don't be deceptive. Salesmen don't like that. But if you bring your title and they see you have that, they see keys, 2 sets, they know you're serious. It's unspoken. So they will give you the proper respect that you're looking for. Now, the pre-approval. This is something probably no one on this has ever done. And we push on this and push on this. I call this the secret sauce that gives you control. It's not the car. We can find the car we like. We can find the price that's a good price to buy it at. It's the purchase order that we'll take a talk about later on, and it is the finance office with the finance manager. If you don't know what you're qualified to buy, you're left with him. And he or she will make it uncomfortable, because he is there to make the most amount of money and profit he can off of you. So if you come to Edify Credit Union ahead of time, we can pre-approve you, and you would know how much you can spend and what that monthly payment would be, and you have it in your back pocket when you go. So when they do offer a promotion, I don't think they can, but if they did beat our rate, I want to tell you, take it. But at least you know you have something and you don't want to be pressured. I'll burst the bubble on that. Some will tell you, well, just tell them, I don't know, I'm not going to finance. I'm going to buy cash. They make money on finance, so they don't really get excited if you say I'm paying cash. Just say, I haven't decided yet. I have a few options. That answers the question, and then you can move on without getting into an argument or having the salesman feel that you're not being forthcoming. You have your options to look at. Let me just make sure I didn't click too far. Yeah, pre-approved. Now, there, price. Now, this is the greatest thing that has happened to us over the last few years, the internet. You can calmly look at the price and contact dealerships and find that vehicle you want on their lot and get a quote online. It takes the pressure of being there until you go to the dealership. So let's say you've decided that Honda Accord is the vehicle for you. You could find the exact vehicle. You can talk to someone online via email and come up with a price that you find acceptable. And then when you go in, versus going on the lot and having a salesman, what they say, up you and bring you in and talk to you, and then the pressure begins. So use the internet as your friend and as a buffer. So at your kitchen table, you can calmly look at the price of the vehicles. And that's going to help you then also with how much you're going to ask us on a pre-approval that you want to be approved for. Now, I brought this up when we talk about trade. When you fill out the purchase order, there's a couple two big areas to look at, and then the third. One is the price of the vehicle. How much am I paying for that vehicle that they told me that we agreed to? If you trade the car, and what I would say is, because it's going to come up, they knew you drove there, you didn't take the bus. Are you looking to trade in your vehicle? I don't know. I have a few options. But you can give me a price on it if you wish. Let them look at it. The used car manager probably will ask for a key. He'll go look at it. He may drive it around a block or two and come back and put a price on it. What you want to look at is the net amount. Because that's what you're paying. You're paying the price of the vehicle you're buying versus the vehicle you're trading in, and you're paying that net amount. Now, if you have negotiated an unbelievable deal, be very honest about this one. It's like a seesaw where you're getting your car almost at cost, the new car. They're not going to be able to, if they're going to sell you that car near wholesale, they can't sell you, they can't take your trade in as a retail price. So that's why I say look at that net amount, because that's really what you're concerned at. And then I want to say look at any other fees. Now, here's a point where you can negotiate. You'll find on many cars on the lot now an addendum. So you see the Maroni sticker. That's the sticker from the manufacturer that lists the VIN number, all the options, the packages, the prices of each, and it gives you the manufacturer suggested retail price or MSRP. And then you'll see an addendum. And it'll say, maybe I'm making some of this up. It'll be some dealerships will have appearance package, and that means they added a stripe on each side. They may have put door guards on each of the doors. They may have put windshields on the windows on the sides or with the sunroof. The value of those are greatly less than what they're listing on that addendum. You could fight them if you want, say, I'm not paying for any of that. If you feel that there's a reasonable price, you could, of course, have that negotiated. What they're trying to do is that allows them to almost, for the basic car, sell that at almost cost, but making it up on the add-ons. You want to avoid that because some of those add-ons add to several $100s. One other thing on that, some will offer a different insurance where they'll window etch the car and there'll already be a number on each window. The theory is that the car were to be stolen, it's harder for the bad guys to resell the windows because they've been etched with a serial number that can be traced. Yes, it was etched, but there's nothing in effect right now. They didn't sell it where they're paying any insurance. So if you don't wish to have that coverage, it's your decision. You don't have to take it. Just tell them, no, I'm adamant. I don't want to pay for that. So look at those other fees. You do have to pay a dock fee, and you do have to pay motor vehicle. Typically, it would be a little bit less if you transfer plates. But I'll say this. If you have a car, and I tend to keep my cars a long time, I like to not have payments. Typically, my license plates are going to start looking like that because they're dirty, they've been bent, cars have backed into you in the parking lot. If you're buying a newer car, you may want to just pay that little bit extra for brand new plates. Your decision. I know it's kind of a personal choice, but take a look at your current plate and say, yeah, do I really want that in the new car I'm getting? Can I fix them? Can I unbend them? Or I'll just go and get new plates. Your decision, but you'll see those two price differences when you purchase the car. And they can lay them out to you. Now, let me go back 1 second because I know Shirley mentioned something when we were waiting about the finance office. There's two areas that a dealership makes their money. One is service, by the way. They make money by servicing the vehicle. And the second one is on finance. Everything's so competitive. And remember, I mentioned the internet. Well, you can go online, and if you dig, you could find out the cost of many of these cars. So you do have a lot of ammunition when you go out there. On many of these sites, even TrueCar will tell you what the car on average is selling for, so you know what you're getting as an average good price. So they rely on the finance manager to make money. And that's where he is going to try to sell you additional products. We'll talk about gap insurance coming up, extended warranties, all good things, but I'll give you an idea how you could save on those. And also any other add-on products. If you're buying an SUV, can he sell you a brush guard? Can he sell you side floorboards to go on the vehicle? Whatever else he thinks you could put on there, it looks a little cool, or a pickup is common for that as well. Be prepared. And it's almost, you have to be abrupt a little bit, but in a professional manner. But they will try to keep you there. They figure the longer you're there, you're going to wear down. Now, when you've agreed on everything, let's talk about taking delivery of the vehicle. Look over the car. Make sure there are no scratches, dents, or other issues. Even a brand new car, it's been on that lot a couple of months, things do happen. I was at one dealership that we had in the back where we had trees overhanging, and it was on date myself, this was a Ford Taurus SHO, their top of the line performance car. And some leaves fell on the rear spoiler, and they sat there. And believe it or not, when a leaf sits on a car for a month or so, it leaves an imprint of the leaf. You don't want that. So you want to make sure you look at your vehicle, preferably during the day, or if it's at night when you're there, that they bring it to you and they have it under the lights. Now, here's something no one tells you about, but I'm going to bring up. The WEO. When I first started, I had no idea what that meant. I said, what's a WEO? It's WEO. There are times that the vehicle may have something or not have something that you want. Let's say you want a pinstripe, and they agree to that, and it's on the purchase order, but the car doesn't have the pinstripe yet. Well, they want you to take the car this evening. What they'll do is write you a "we owe," stating that they owe you a pinstripe, and then you arrange for a convenient time to come back. Doesn't take forever. They probably get it done in 20 minutes, and they'll put a pinstripe on. There's nothing wrong with a "we owe." What's wrong is if they do owe you something and you don't get a "we owe." So it's not someone telling you, "Oh, when you come back, I'll get you." No, no. If it's missing floor mats that they said you would get. If it doesn't have the pinstripe you said you wanted. If you wanted this, well, things are up to date now and streaming, but in the old days, if you wanted the 6-disc CD changer in the trunk and it wasn't there, everything's fine. Just make sure you get the "we owe." It's not a bad thing to have. It's a good thing to have because it holds the dealer that he has to get those things for you. Now, there's some other things we talked about I just alluded to. GAP insurance. Now, the acronym stands for Guaranteed Asset Protection. What that means is if you buy a new car and you only use a couple of $1,000s as a down payment. Now, this is something we all know. Our dads taught us this growing up. As soon as you drive off the lot, as much as we love cars, it's a depreciating asset. Doesn't gain value, it loses. So it's worth less than when you just bought it. If you put little money down, if something were to happen to it, if it was stolen and not recovered, if it was damaged beyond repair, the insurance money that the insurance company, that check that they'll write you, will not equal the payoff on your loan, the gap. And you're responsible for that. Now, here's the beauty. The finance manager will charge as much as he can. He doesn't talk about total cost, and there isn't typically a set cost. He talks about monthly payment. So when he tells you this, and it is a good thing to have, by the way, and you go, "Yeah, it sounds pretty good." And he'll say, "Well, for only $10 more per month." Sounds reasonable. But that may mean you're paying several hundred to maybe $1,000, whatever he felt that he can get from you that you'd find acceptable. Well, we offer the same protection at the credit union at much lower costs, less than half the cost. So we can offer that same coverage for you. And if you were to get it from a dealer, that could be canceled, and then you could pick it up with us. So I would definitely recommend. It makes sense in many instances when you're putting down little or no down payment, because it will be a big gap between what you owe and how much money you'll get from the insurance company. Now, the other thing is mechanical breakdown coverage. Now, at Edify, we've partnered with Route 66. That's a well-known company. In fact, that's the same company that probably offers the breakdown coverage that they're trying to sell you at the dealership. They will sell to the dealer as well. Same thing holds true with this as with the GAP. There's no set amount they look to charge you for this. They get as much as they can. So they break it down to the monthly payment. And it's kind of a peace of mind. Well, for another $20 a month, wouldn't you like peace of mind that you're covered? Well, yes, but what does that $20 a month mean? You'll find on average, our mechanical breakdown coverage is going to be 60% or more less than the dealer is charging you. And the other thing that's unique about our product is there's no deductible on covered parts and labor. So that, again, is a savings for you. You don't get that on a lot of things. At the credit union, you're a member, and our responsibility is to work for you. So we gear a lot of the products and services that we offer at what the cost is to offer it to you, and so that you have peace of mind that you're getting the very best price possible. Now, remember I mentioned the secret sauce and getting a pre-approval? And I think I said most of us, if not all of us, haven't done that. It's common. You may even leave this session tonight and go, oh, I love Bill. He's the best I've ever heard. I'm going to get a pre-approval. Well, you get busy in work, weekend hits, you forgot to get the pre-approval, and your spouse says Saturday afternoon, well, we're not doing anything. Let's go look at a car. And lo and behold, you found out you bought a car. Well, we have a safety net for you. This is a promotion we're currently doing where we drive down your rate and drive up your savings. You'll get it if you refinance that vehicle with us. There's no prepayment penalty in the state of New Jersey, so you can prepay that loan even before your first payment and pay it off. You get a 2% rate drop or better if you qualify from the rate you got. We offer 90 days, no payments, and we can also extend your term up to 12 months for lower monthly payments. So again, if qualified and if it fits the criteria, if you left with a 60-month loan and it is really tight with the drop in rate and maybe adding 12 months to 72 months, you may have a really comfortable, manageable monthly payment to keep more money in your wallet. So we do run promotions occasionally. I find this one to be pretty cool because it gives us that safety net, that safety valve. Gee, I forgot the pre-approval. I was going to do it. I didn't do it Tuesday. I didn't do it Wednesday. I got tied up in work on Thursday. All of a sudden, Friday night or Saturday, I'm at a dealer. And I got the car. I kind of got the price. The salesman's nice. I like the dealership. What do I do? Well, we almost give you a do-over here. Think of it in those terms. That's what maybe we should call it, the do-over promo. And then finally, we talk about we have your back. That's what we're here for. Now, I made a note, a sticky here I just looked at to remind me. I should have put it a little bit further over. I want to go back one thing about automobile leasing. And I think I have a slide here I want to talk about. It made it. No, didn't make. Nope. Had it right there. It didn't go. When I was doing research, I noticed when I was going through, you start doing research, then these computers nowadays, they see what you're looking at and they send you things. So I was getting a lot of ads for end of lease. And this came up at the last presentation that we did. We had a member who had a leased vehicle. It was coming due for a lease and wanted to know if they could refinance with us. There's no secret to it. Yes, I'm going to say yes. I mean, obviously, you got to fill out the paperwork, but I'll say yes for a few reasons. In order to lease, you had to have decent credit. Banks don't lease vehicles unless you have good credit. So, assuming nothing's changed, you still have good credit. If you think about it, it's probably the best used car you're buying or ever going to buy because you don't have to guess or think about how the past owner or owners have taken care of it. You're the owner. You were the leasee. So you know how the vehicle was taken care of. You know how many miles are on it. You know whether or not you really were in a bad accident with it. So you know everything about it. So it could be the best used car to buy. And typically people do that for that main reason. They like the car. They've only had it a few years. There's still a lot of life to it. They don't want to give it up. And also they may be over mileage as compared to what the lease offers you. It could have been whether it offered you 10,000 miles a year. What that means is at the end of 3 years, anything over 30,000 miles, you typically will pay a per mileage charge. Could be as high as 25 cents a mile. So make sure that if that were to occur and you buy the vehicle, that's going to make you a savings at the end as well.
There's a question. Bill, one person chatted in. I live in PA. Are the rules the same as New Jersey?
Oh yeah, tax is different, obviously. The rules still apply the same. Yes.
Okay. And so with the 2% rate drop, if we get 4.99 at the dealer, you will give us 2.99?
Good question. That's a trick question, probably from lending. Our floor is 4%. So I think our lowest rate is like 4.99. So we couldn't go below 4%. But I'm going to tell you, 4% on a pre-owned certified or even a new car is a really good rate.
Right. Okay. And then do pre-approvals appear as a hard inquiry?
No, they will not hit you as a hard inquiry, but they could show up on your credit. But you have also um that's kind of changed over the years. It used to be what would happen is when you went through the maze of dealerships and got tired of getting beaten up and trying to say, I'm trying to find someone who's nice to me. When you go to 3 or 4 dealerships, it used to be if they all ran credit on you, that would start to affect you. There's kind of a cushion built into the system now that if you had credit run, it's not going to immediately drop you when you go to the next place.
Right. And I actually do talk about that in the credit session. So if you're, whether it's your house hunting or, you're looking at cars, yeah, within like a 2-week or 14-day window, that'll count as one hit to your credit, not 14 hits. And,
Yeah.
because again, they understand you're shopping and people are going to be pulling your credit, to take a look.
And I'll say another thing that we do with the credit union. You're a member. We want to take care of you. So when we look at what you can qualify for, we really will have your best interests at heart. At a dealership, you know, whether you pay 400 a month or 550 a month, they really don't care. And if you say yes to 550, they're very happy. So where you may be more happy at 400. So we're really going to qualify you at a rate that you qualify for and is not going to take you to the edge of the cliff that you're going to jump off when you get that first payment.
True, true. Another question, what credit rating is considered a well-qualified buyer? And I'm not sure, so the person who typed that in, are you talking about in general or are you talking about at Edify Credit Union?
No, I'm talking in general in
Okay.
advertising.
Okay.
Obviously by law it's allowed. They can say for well qualified. And they say that because each manufacturer entity, like for Toyota, it's Toyota Motor Credit. For Ford, it's Ford Motor Credit. And others, it's others, Honda Credit. They they have their own criteria. And I'm going to say it's going to be well above 700 as a credit score.
Okay.
If you ask you'd have to ask the salesman to ask the finance manager what that cutoff is.
Right.
Yeah, one thing on that, again, I'll alluding to what you do when you talk about budgeting, credit scores. The credit score that you get, because we all do it, you have Credit Karma, and I can name them that you can get your credit score. It is your credit score based on that criteria, but it's not the same software that the dealer is using, or maybe what we're using. It's close. So by close, I mean on one of them, it could say your credit score is 710, but on another one, it may say 715 or 720. And then that's where you jump up or drop down. So it's a
Right.
good barometer, but don't be shocked if my credit score is 710 and you find out someone says, no, it's 705.
And different lenders, some will use one, TransUnion, Equifax, and Experian. Some lenders will only use one credit company. Some will use 2 or 3. And if they use 2 or 3, they will average out the scores. And I really don't know the answer, but I know in my experience, TransUnion is always the lowest number. So
Right.
for whatever reason,
But
but
what happens is when they run your credit at the dealership, the finance manager, he knows all of the banks that he uses, and he'll look at what they call their buy rate. So if he can buy that loan for you at 7%, he may sell that to you at 9.5% or
Mm.
10. If you say okay, then he's fine, and that's his profit margin there.
And they don't really talk rate. They try not to talk rate.
It's all monthly payment, and the real good ones can break it down to that. If you just gave up that Starbucks coffee every day, it would
Right.
cost you almost nothing. So don't worry about it. So that's what you have to guard against, because you like that Starbucks coffee. I like the carrot cake they have, to be honest with you.
Let's see, is there any more chat questions before I officially end the recording of the meeting? And then after that, like I said, everybody will just can jump on camera if you want to hit Bill with all the questions.
You know what I didn't think, Barbara? And I just thought about this as we were talking and you mentioned it. I'm assuming through Zoom, we have a way of emailing them afterwards, thanking them. What I should have done on the last slide, but maybe we can do on that, is give them my email address
Absolutely, Bill.
if they feel they want to, reach out to me and talk to me.
I will share Bill's information, and certainly, you can reach out if you're interested in a loan and you're not sure the best way to apply and you have questions, you can ask me or Bill. So yeah, we're here for you. So let me close it because there might be people that want to jump on camera. So, oh yes, thanks for Bill's information. So officially, I want to thank you all for taking the time to join us this evening for our virtual session. This recording will somewhere magically appear on our website at some point when I have a chance to clean it up. And I hope you keep us in mind for future sessions. So thank you so much.
Take care, everyone.
Hold on now. Thank you, Bill.
Thank you.